In my first video on Kiddie Tax, we looked at Carl, Dorothy, and their son Zack and how they reported Zack's interest income that was subject to Kiddie Tax. But what if Zack's income consisted of both interest income, which is subject to ordinary tax rates, and qualified dividends, which are subject to capital gains rates? Needless to say, it gets more complicated. I'm a tax geek, and here are qualified dividends, capital gains, and the Kiddie Tax, oversimplified. First of all, if you haven't watched my other videos on the Kiddie Tax, qualified dividends, and capital gains, you might want to do that before watching this video. Otherwise, this video won't make much sense to you. You can find a link to a handy playlist of these videos using the card above or a link on the end screen. For simplicity's sake, I am using qualified dividends to demonstrate this concept. However, the same calculations would apply to any sort of capital gain distribution or long-term capital gain as well. So in this example, Carl and Dorothy's son Zack still has $4,250 in unearned income, but instead of it just being interest income, his income consists of $750 in interest and $3,500 in qualified dividends. And just like before, Carl and Dorothy are going to file a tax return for Zack and calculate his Kiddie Tax on Form 8615. Part 1 of the Form 8615 is filled out just the same as before, and Part 2 is filled out all the way through line 8. Let me summarize what we're about to do. First, we're going to apportion the qualified dividends between Zack's income that is subject to Kiddie Tax and the income that isn't. We then calculate the tax on Carl and Dorothy's income, taking into account both Zack's income that is subject to Kiddie Tax and the qualified dividends that are subject to Kiddie Tax using a qualified dividends and capital gains worksheet. Next, we look up the tax on Carl and Dorothy's income without regard to Zack's income. This figure is then subtracted from the result of the previous step to arrive at a tentative Kiddie Tax. Next, we calculate the amount of tax on the amount of Zack's income that is not subject to Kiddie Tax, including the qualified dividends that are also not subject to Kiddie Tax using another QDCGW. This amount is added to the tentative Kiddie Tax from the previous step. And finally, we calculate the amount of tax on Zack's entire taxable income without regard to any Kiddie Tax, including all of the qualified dividends, using a third qualified dividends and capital gains worksheet. This amount is then compared to the amount from the previous step, and the higher amount is Zack's tax. To show how that works, let's continue filling out the Form 8615. Figuring out the tax on Carl and Dorothy's income, including Zack's unearned income subject to Kiddie Tax when qualified dividends or capital gains are involved, is a rather involved process. First, they need to fill out this line 5 worksheet. On line 1, they enter Zack's qualified dividends of $3,500. This figure is then divided by Zack's total unearned income from line 1 of the 8615, and the result of 0.824 is entered on line 4 of the worksheet. This is then multiplied by $2,300, which is the amount of Zack's unearned income that is not subject to Kiddie Tax. The result of this multiplication, $1,895, is the amount of Zack's qualified dividends that is not subject to Kiddie Tax, and subtracted from Zack's qualified dividends of $3,500, resulting in $1,605. This is the amount that is subject to Kiddie Tax that is also subject to capital gains rates. If Zack had capital gains instead of or in addition to the qualified dividends, a separate worksheet calculation has to be made for the capital gains. Carl and Dorothy's taxable income, including Zack's income and qualified dividends subject to Kiddie Tax, are put into a qualified dividends and capital gains worksheet to figure the amount of tax. I've already covered the QDCGW in an earlier video, but there are two differences. Line 1 of the worksheet is the amount from line 8 of Form 8615, and line 3 comes from line 8 of the line 5 worksheet. Suffice it to say that the bottom line of the form is $12,447. Finally, we have a figure for line 9 of the Form 8615. Next, on line 10, we put the amount of tax on Carl and Dorothy's income without taking into account Zack's income. Line 10 is subtracted from line 9, giving the amount of Kiddie Tax. But we're not done yet. For Part 3, we start by subtracting the amount subject to Kiddie Tax from Zack's taxable income. The result is entered on line 14. Completing a qualified dividends and capital gains worksheet for Zack's income that is not subject to Kiddie Tax, including the qualified dividends not subject to Kiddie Tax, shows that none of this amount is taxed. 0 is entered on line 15 and added to line 11, giving Zack a tentative tax of $307. But wait, there's more! We still need to determine the tax on the amount of Zack's total taxable income of $3,100. Yet another qualified dividends and capital gains worksheet is prepared, this time with the total amount of the qualified dividends. This worksheet also shows 0 tax, so 0 is entered on line 17 of the 8615. Since the amount on line 17 is less than the amount on line 16, the $307 from line 16 is entered on line 18 and is Zack's tax. This tax is then entered on line 16 of Zack's Form 1040. Only the Form 1040 and Form 8615 are sent to the IRS. Carl and Dorothy keep the worksheets with their records in case the return is questioned. Zack's income is low enough so that neither QDCGW we prepared for him show any tax. This might not be true if Zack's income and qualified dividends were higher. And please don't try to do this on paper. The purpose of this video was to give you an understanding of where the figures come from and how the calculations are made. Because believe it or not, there are still details that I didn't cover. Of course, additional information and resources can be found in the video description. If you found this video informative, please give it a thumbs up and share it with anyone who might find it useful. Subscribing to the channel and tapping the bell gives you first crack at future Tax Geek videos. And as always, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.